Hi, Warren. Hi, Charlie. My name is Carrie, and this is my daughter, Chloe. She's 11 weeks. It's our very first Berkshire meeting. We're from San Francisco, and we have a question on employment for you. As both a major employer and a producer of consumer goods, what do you make of the uncertain outlook for good full-time jobs with the rise of automation and temporary employment?
Well, if we'd asked that question 200 years ago and somebody said, with the outlook for development of farm machinery and tractors and combines and so on, meaning that 90% of the people on farms were going to lose their job, it would look terrible, wouldn't it? But our economy and our people, our system, has been remarkably ingenious in achieving whatever we have now, 160 million jobs, when throughout the period ever since 1776 we've been figuring out ways to get rid of jobs. That's what capitalism does, and it produces more and more goods per person. And we never know exactly where they're going to come from. I mean, I don't know what if you were whatever occupation. Well, if you were in the passenger train business, I mean, you were going to. That was going to change. But we find ways in this economy to employ more and more people, and we've got now more people employed than ever in the history of the country, even though company after company, and particularly in heavy industry and that sort of thing, has been trying to figure out naturally how to get more productive all the time, which means turning out the same number of goods with fewer people or turning out more goods with the same number. That is capitalism. I don't think you need to worry about American ingenuity running out. I mean, you look at people in all kinds of businesses, and they like to make money, but they really like to be inventive. They like to do things, and this economy, it works. It'll continue to work, and it's very tough in certain industries, and there will be dislocations. We won't be making as many horseshoes and that sort of thing when cars come along and all of that. But we do find ways now to employ whatever we're employing, 155, whatever it is, million people, and supporting a population of 330 million people. When we started with 4 million people, with 80% of the labor being employed on farms. So this system works, and it will continue to work. And I don't know what the next big thing will be. I do know there will be a next big thing. Charlie?
Well, we want to shift the scut work to the robots to the extent we can. That's what we've been doing, as Warren said, for 200 years. Nobody wants to go back to being a blacksmith or scooping along the street, picking up the horsemen or whatever the hell people used to do. We're glad to have that work eliminated. And a lot of this worry about the future comes from leftists who worry terribly that the people at the bottom of the economic pyramid have had a little stretch when the people at the top got ahead faster. That happened by accident because we were in so much trouble that we had to flood the world with money and drive interest rates down to zero. And of course, that drove asset prices up and helped the rich. Nobody did that because they suddenly loved the rich. It was just an accident, and it will soon pass. We want to have all this productivity improvement, and we shouldn't worry a little about the fact that one class or another is a little ahead at one stretch.
Charlie and I, we worked in a grocery store, and when people ordered a can of peas, we had ladders that we climbed up to reach the can of peas, and then we placed it in a folding box, and then we put it on a truck. And if you looked at the amount of food actually transferred between the producer and the person who consumed it, and the number of people involved in the transaction, it was, I don't know whether it was 1/3 or 1/4 or 1/5 as efficient as the best way now to get food delivered to you. And
the food was worse.
And my grandfather was distressed about the fact that this particular credit and delivery kind of store would be eliminated, and it was eliminated. But society
It's
progressed.
coming back. It's coming back.
It's coming back, but more efficiently. Anyway, we've seen a little creative destruction, and frankly, we're glad that it freed us up to go into the investment business. It worked out better for us. Becky?
This question comes from Brian Gust of Grafton, Wisconsin. He's talking about regulators and politicians and says the Berkshire Hathaway investment portfolio holds several large financial institutions that are heavily regulated and are politically charged. Do you feel that in some cases the regulators and/or politicians are running the big banks instead of the CEO and the board of directors?
Sure, but not too much.
No, insurance has been regulated. It happens to be regulated primarily on a state basis, but insurance has been regulated ever since we went into it, and it hasn't. You know, when I looked at GEICO, it was doing $7 million of business, and it will do 30-odd billion of business now. It's been regulated the whole time, and regulation can be a pain in the neck generally. But on the other hand, we don't want a bunch of charlatans operating in the insurance business, and insurance actually lends itself to charlatans because you get handed money and you give the other guy a promise. And I like the fact that there is regulation in the insurance business or the banking business. It doesn't mean it can't drive you crazy sometimes or anything of the sort, but those businesses should be regulated. They're too important, and any time you can take other people's money and they go home with a promise and you go home with the money, I don't mind a certain amount of regulation in those businesses. Charlie?
Yeah, well, if you're using the government's credit because you have deposit insurance, there's an implicit bargain. You can't be too crazy with what you do with the money. That's a perfectly reasonable, and I absolutely believe that we should have a regulation system that involves supervision of risk-taking by banks. It got particularly bad in the investment banks at the peak of the real estate crisis. And the behavior was, there's only one word for the behavior. It was disgusting. And it was pretty much everybody. It's hard to think of anybody who stayed sane in that boom. They felt the other guy's doing dumb things, I've got to do it too, or I'll be left out. What a crazy way to behave. And so, sure, there's some intervention, but probably has to be.
You want a Food and Drug Administration. You know, you'll be unhappy with how they do it if you're in the business and all of that. But I find any kind of regulation irritating. But nevertheless, it's good for the system. And actually, a number of regulators, I would say that they've really been quite sensible about regulation. You don't feel that way when you're being told how to run your business. But as Charlie says, you wouldn't want to be a bank that ran in an unregulated system where anybody could come in and do all kinds of things that would actually have consequences that drew you into the problems that they created themselves. We had the Wild West in banking long ago, and it produced a lot of problems in the 19th century. Jay?
For the past several years, in Berkshire's annual shareholder letter, there's been increasingly less detail provided on its operating businesses and financial performance. For example, the company is no longer providing details on the finance and financial products segment, or a balance sheet for the manufacturing, service, and retail segment, or a breakdown of float by unit in the insurance business. For a company as large and diversified as Berkshire, why are investors being provided less information than previously?
Well, I don't think we actually provide less information. We may present it in a somewhat different form from year to year. Just this year, for example, I started my letter, as usual in my mind, as saying, "Dear Doris and Bertie, my sisters," to tell them what I would tell anybody that had a very significant proportion of their net worth in Berkshire, who was intelligent, did not know all the lingo of our various businesses, that would read a lot of words because they did have a large investment. So if I explained anything and did a decent job, that they would understand what I was talking about. And I tell them that in the language that I think will be understandable to a significant percentage of 1 million plus people who have all kinds of different understanding of accounting and all that sort of thing. I tell them the information I would want to hear on the other side. Now, if I was a competitor and I wanted to know what one of our furniture store was earning or something of the sort, I might love it, but it doesn't really make any difference. If you're talking about a $500 billion organization, if you understand our insurance business, and in terms of giving you the picture, I think in 3 or 4 or 5 pages, actually we've got a whole bunch of stuff that's required by the SEC about loss reserve development. I think you can write a 300-page report that gives a whole lot less information than a 50-page report, and you lose people. So I try to tell them, like I say, in my mind it's my sisters. I try to tell them what I would tell them if we had a private business, and they own a third of it each, and I own a third, and once a year they like to get filled in, and they don't know what a combined ratio means because it's a dumb term that everybody uses, and the important thing is call it a profit margin. They don't know what the operating ratio is in the railroad business, and it's an obsolete term. It'd be better to call that a profit margin. But the lingo, we're not writing it for analysts. We are writing it for shareholders, and we're trying to tell them something so they can make an addition. They can not only get the picture as to what we own now, but how we think about the operation, what we're trying to do over time. And we try to do the best job we can every year. And I think if somebody is terribly interested in the details, they really are missing the whole picture, because you could have known every detail of our textile business in 1965, but we could give you the information as how much we made from linings and how much we made from handkerchiefs, and you'd be in a different world. I mean, the important thing was how we looked at running money and what we would do about things over time, and it just, you could have gotten very misled. If you'd read it in 1980 or 85 and you looked for great detail on how See's Candy was doing and as they moved eastward, we'll tell you that overall that failed in terms of moving out the territory, but going into a whole lot of detail that might be very interesting to an analyst, but really for the shareholder, they've got to make a decision as to who's running their money and how they're running it and what they've done over time and what they hope to do in the future and how to measure that. And we're writing it for the individual. Charlie?
Well, I suppose I should be watching every tiny little business down to the last nickel, but I don't. And I don't want that much detail. And I think our competitors would like it, and it wouldn't do our shareholders any good. So we'll probably just keep reporting the way we do.
See how flexible we are here.